Welcome to the Hectare Trading Grain Market Update for the 19th of June 2026. This week, our benchmark spot price for feed wheat is £174, no change on last week. The dominant macroeconomic driver this week was the US-Iran framework agreement to reopen the Strait of Hormuz, easing immediate fears over agricultural input costs ahead of the 27 planting season. Global wheat supplies remain comfortable due to massive upgrades in the Black Sea region. The latest WASD raised Russian wheat production projections for 26/27 to 88 million tonne, while Ukrainian output was raised to 23.5 million tonne due to favourable spring weather conditions. The November London feed wheat contract dropped over £2 on Monday to a three-month low of £177.25. The rest of the week saw a patient recovery, the contract rising to £179.75 on Wednesday before closing Thursday at £179. On Hectare Trading, feed wheat in the Midlands has received bids up to £187 for July movement. Meanwhile, farmers have been locking in prices on 26 feed wheat, selling forward in North East Scotland and the East Midlands. Our benchmark price for milling wheat is £183, unchanged from last week. Persistent heavy rains in the US soft red winter wheat belt are delaying harvest and raising severe crop quality concerns. This is on top of the WASDE's downgrade to the US wheat harvest, cutting production to 42.01 million tonne, due largely to the poor US hard red winter crop. At home, given high fertiliser costs and the inherent weather risks involved in achieving the required protein and quality specifications, many growers are questioning whether milling wheat carries too much financial risk, raising concerns over future domestic supply. September Paris milling wheat started the week drifting below €200, closing Monday at €199.75. Successive days of gains brought the contract back to €203.50 on Wednesday, before easing to €203.25 at Thursday's close. We've seen bids on Hectare Trading this week for Group 1 wheat up to £204 in the Midlands for July movement, with farmers also selling 26 Group 1 wheat forward in the southwest for September movement. Our benchmark price for feed barley is down £1 this week at £161. Recent rainfall has significantly aided grain fill for UK barley, though there are mixed expectations for the harvest. While spring barley crops suffered from moisture stress earlier in the season due to prolonged dry and warm conditions, recent rains have provided welcome relief. On Hectare Trading this week, feed barley achieved bids up to £155 in the Midlands, moving in June or July. Our benchmark price for oilseed rape is £448, down £17 on last week. The US-Iran deal placed downward pressure on the global oilseed complex throughout the week, although doubts over the durability of the ceasefire remain. Brazil has confirmed a bumper soybean harvest of 180.3 million tonne, 5.1% higher than the previous record set last year. This means that Brazil's soybean production has now grown by 56.7% since 2017, dramatically impacting the global market. Following significant weather delays, Canadian farmers have rapidly accelerated their canola planting, reaching 73% of the intended acreage by early June. While Canada's raw canola exports dipped in April due to weaker demand from Japan, the US is aggressively boosting its purchases of Canadian canola oil due to strong biofuel demand. Paris rapeseed futures have been fragile throughout the week, the August contract dropping €9 to €513.25 on Monday, then closing Tuesday at €507.50. After a brief respite on Wednesday, the contract fell away again to €502 by Thursday's close. If you've signed up to Hectare Trading, you can access the latest market insights. By filtering on region, you can see our regional benchmark price estimates, our market analysis, the latest prices that have been offered to farmers, as well as market commentary, futures, and access to wider market news. That's all for this week. Don't forget to sign up to get the latest market insights and click subscribe to get the next update.